How is the market in October? First off, let's start with the good news. So both the median and the detached home price, median home price, increased this past month. We just got all the data in for September, and so from August to September, the combined median home price moved from $810,000 up to just under $813,000, and for the detached home price, it moved in August from $910,000 to just up to $915,000. Now that's really great news. It's a small bump, but I think what's really important about this little piece of data is that it shows the resiliency and the underlying fundamentals of demand in the current market are still very strong. What I really think this correlates to is if you go back about 60 days, there was a lull, a little dip in the interest rates, and what you see is all the buyers who were prepared, ready, actively looking, took advantage of this quick dip in the interest rates, got into the market, a little bit of increased competition, bumped the prices up a little bit, and now I think the only unfortunate thing you'll see about this is about 60 days from now, what we are going to see is right now interest rates just crossed 7% for the first time in about 20 plus years. So lucky number 7, we'll see what happens in about 60 days from now. And the reason these things move at about 45 to 60 days after the data is, of course, you list a home. Generally right now the average market time is around 30 to 32 days, then your average escrow can take about 30 days. So put that together, that means maybe your home sold in 15 days if you priced it well, 30-day closing, that's 45 days on the short end, generally at least 60 days on the long end. So when you go back 60 days, there was a dip in the interest rates, that provided a great buying opportunity. People wanted to lock into that dip in the rates, and the closings in September now are reflecting that data. Little increased activity, increased competition, and it resulted in a little bump in the pricing. People's buying power goes further when interest rates dip. The same home at a lower interest rate, pay higher price, and you get the same lower monthly payment. Now, rounding out some of the other important data points, the average list price to final sales price has moved down to 96.5%. So that has been steadily decreasing little by little, basically since April. And so now the average winning offer can come in at about 96.5% of the listing price, and that's where they're closing at. What does that show? It shows that there is still some downward pressure overall on pricing, even though we just discussed that there was that nice little bump in pricing. We're going to have to see if the pricing continues to show a trend next month, or if it does revert just due to, again, the interest rate sensitivity of the market. Aside from that, the inventory rate right now is moving at about 1.7 months. So that means if no new homes hit the market right now, all the homes will be gone in about 1.7 months if the rate of buying continues at the same pace, which again, it's increasing days on market, average days on market. It's also allowing buyers to look around and be a little bit choosier. There is still historically low inventory, so the active buyers that are out there are still looking at a very few select homes. Inventory is extremely low right now, but they have more time to navigate because there isn't a flood of competitive buyers coming in right behind them, chewing up the inventory. So it's an interesting dynamic. What I really think is important to note from this is you really have to do your homework on your home to prepare it for the market. Right now, you can't have rough edges, eyesores, yellow or red flags, things that are like leaking faucets, really rough curb appeal, really rough paint job, exterior look of the home. The homes that are selling are the homes that are in good shape, they've been maintained well, or they've been prepared well. The homes that are lagging and are increasing this market time and are depressing the overall pricing are the homes that just aren't in good shape. There's a lot of work, there's a lot of deferred maintenance. Those homes, more so investors are still looking to snatch those up because investors are still present in the market. They're just really looking for the deals, so they're going to go after the ones that need a lot of work. So as a homeowner, prepare your home. If you want some recommendations on the best areas to focus your budget, that's exactly what we do with our clients. We walk through your home, we identify areas that just a light facelift or maybe some fresh paint, fresh flooring, decluttering can really make your home pop, and a small dollar can make a good return. But you really do have to prepare your home for the market now because buyers are going to use the opportunity to be the few buyers in the market to negotiate and try to use leverage to their advantage. Now, as a buyer, of course, that is your opportunity. Right now, you're not fighting against 15 other offers, so take your time. You can do your due diligence. You can make sure if you're making a smart offer price that you're also getting contingencies, doing an inspection, making sure that the home does meet the criteria that you need, and you can actually get a good home at a fair price. Interest rates, of course, that's the elephant in the room. Everybody knows the interest rates are really rough right now. Don't count on them going down, but let's hope. Once the Fed can tame inflation, it's most likely going to result in about a year and a half from now, lower rates, but don't plan on buying something at a rate you can't afford now because you think they're going to go down. That's a recipe for a really rough road if the rates take longer to go down, or who knows, maybe 6 to 7% does become the new normal. It's hard to say with any certainty what's going to happen because there is so much volatility in the market. There are a lot of things pointing to the fact that once the Fed does tame inflation and hopefully things can kind of hit a soft landing, that interest rates can come back down into probably the 5% range. I would not bet on them ever getting down into that high 2, low 3% range again, or at least not anytime in the near future, so I would not be waiting for that. If you have any questions about the market, I would love to hear from you. Thanks a lot.